If you are sitting there, staring at your computer screen or your phone, nearing retirement, and you are panicking because you think every single one of your neighbors has $1 million stuffed under their mattress, I need you to take a deep, deep breath. Stop comparing your financial reality to a fiction that does not exist. You want to know the truth? You want to know what the average person actually retires with in the bank? The number one question keeping you awake at 2 o'clock in the morning is, am I normal? Am I going to be a burden? How much does everyone else have? Let's strip away the noise and look at the raw, hard numbers, because what you think is the average and what is actually reality are two completely different things. When you look up financial articles, you see this massive, beautiful number. They tell you the average retirement savings for people in their 60s is over $500,000, or maybe even close to $1 million depending on who is doing the survey. And you look at your own account, maybe you have $150,000, maybe you have $80,000, maybe you have $200,000, and you feel this overwhelming sense of shame. You feel like a failure. But I need you to understand a critical piece of financial math. There is a Grand Canyon of a difference between the average and the median. If 10 people are sitting in a room, and 9 of them have $0, but one of them is a multimillionaire with $10 million, the average savings in that room is $1 million per person. But does that tell the true story of the room? Absolutely not. The typical person in that room has nothing. When we look at the median, the true middle of the pack, where half of the country has more and half has less, the reality of what Americans are retiring with is a massive wake-up call. For households headed by someone between the ages of 55 and 64, the median retirement savings is right around $185,000. For those aged 65 to 74, it crawls up to just about $200,000. That is the real number. That is what the typical American household has actually managed to save. So if you have $200,000, you are right there in the middle of the pack. You are not trailing behind the entire world. Can you comfortably retire on $200,000 using the traditional methods? Let's do the math. If you use the standard 4% withdrawal rule, a $200,000 nest egg is only going to hand you $8,000 a year. That is less than $700 a month. You combine that with the average monthly Social Security check, which is around $2,000, and you are trying to survive on $2,700 a month before taxes. If that thought sends a shiver down your spine, good. It should. Fear is not an enemy if it forces you to open your eyes and take action. The real problem facing retirees right now isn't just that they didn't save enough, it's that they are trying to fund a 21st century retirement using 20th century expectations. You cannot expect to live $1 million lifestyle on a $200,000 reality unless you change the rules of the game you are playing. The biggest fear I hear from people every single day is the fear of running out of money before they run out of breath. It is a terrifying thought. You worry that one major medical emergency, one spike in property taxes, or one prolonged bout of inflation is going to wipe out everything you worked 40 years to build. And because you are afraid, you paralyze yourself. You put off making decisions, or worse, you take reckless risks with the little money you do have, hoping for a miracle in the stock market. Hear me now, hope is not a financial plan. You do not gamble with your safe money when you are standing on the precipice of retirement. So what do you do if you are the average person, looking at that $200,000 balance, knowing it's not quite enough to live the dream you originally envisioned? You stop mourning the money you didn't save in your 30s and 40s, and you start maximizing every single dollar you have control over right now. First, you look at your debt. If you are entering retirement carrying a mortgage, car payments, and God forbid, credit card debt, you are creating a financial leak that will sink your ship. Your primary goal in the final years leading up to retirement must be a relentless, aggressive execution of your debt. You cannot afford to pay interest to a bank when you need that money to buy groceries and pay for health insurance. Second, you have got to reevaluate the biggest asset you likely own, your home. If you are living in a 4-bedroom house with a high property tax bill and utilities that cost a fortune, you are bleeding money just to maintain space you do not use. Downsizing isn't a sign of defeat, it is a strategic victory. Selling a large home, clearing the remaining mortgage, and moving into something smaller and more affordable can instantly inject cash into your retirement bank account and permanently lower your monthly fixed expenses. Third, let's talk about Social Security, because this is where so many people make an irreversible mistake. If you have a smaller nest egg, your Social Security benefit becomes your absolute life support system. Taking your benefits early at age 62 cuts your monthly payout permanently. If you have to work part-time or consult for a few extra years just to let that Social Security benefit maximize, you do it. You need to understand that financial security isn't about matching some arbitrary number a broker on television told you to aim for. True financial freedom is when your guaranteed income matches or exceeds your mandatory living expenses. If your Social Security covers your housing, your food, and your healthcare, then whatever you have in the bank is your cushion, your joy, your safety net. Do not let the averages make you feel defeated. Your financial story is not finished being written just because you hit age 60 or 65. You have options, you have power, and you have the ability to make smart, calculated choices today that will protect the quality of your life tomorrow. Face your numbers. Own your reality. Stop wishing for what could have been and start executing on what is. You can do this, but you have to be strong, you have to be honest, and you have to act now.